Hey listeners, it's Dan here. I want to tell you about a company that I'm really excited about. It's called Current. It's a fintech company that's completely disrupting traditional banking. I'm a new Current customer, and it's already helping me and my entire family manage our finances, all from one easy-to-use app. So try Current for yourself and get the app by going to current.com/OK. That's current.com/OK. Current is a financial technology company, not a bank. Banking services provided by and Visa debit card issued by Choice Financial Group, member FDIC, pursuant to a license from Visa USA Inc., and can be used everywhere Visa debit cards are accepted. All right, welcome to OK Computer. I am Dan Nathan. I am joined by Rick Heitzmann, the founder and CEO of FirstMark Capital. Hi, Rick.
Hey, Dan. How are you?
I'm good. We are in studio here, and we are on election eve. It is Tuesday afternoon. We have a ton of stuff to talk about today. Okay, there's tons of stuff going on. Public markets, crypto, private markets, a whole host of things here. I have a great conversation with Jake Wood, the CEO founder of Groundswell, also the founder of Team Rubicon, which is an amazing organization. We're going to talk all about that with Joe Marchese, the build partner at Human Ventures. Okay, so stick around. That's coming up after Rick and I we're going to go through a lot here, people. We're going to talk about Elon, Twitter, Tesla, the interrelations of that. We're going to talk about SBF, FTX, Binance, BTC, the whole shebang, okay? But Rick, here we are. By the time our listener is taking all this beautiful content in, there's going to be a pretty clear indication of how the midterm elections went, okay? And obviously, a lot of people feel like the Dems are going to lose the House and the Senate. It's not that weird of occurrence in a midterm election, a first-term president. I'm just curious. Let's assume that that does happen. You know, there's a lot of data that suggests in public markets that that's good for the stock market. People like, divided government. How is that played out in your 20 plus years as a VC? What does it do for private markets?
I think it's the same for in both the public markets and private markets. That divided House, divided executive branch and legislative branch means not much gets done. And as we know, and as we saw the opposite in the world of Trump, that having rules of the road and having some consistency and knowing what's going to happen matters a lot. So knowing that not much is going to happen, and you're pretty certain of that, provides at least one less variable in your investment equation.
Yeah, so I guess the point would be is like if your fear was that a Democratic Congress with Democrat in the White House is that maybe interest rates could go higher, maybe further fiscal stimulus, maybe further regulatory scrutiny, like all those sorts of things.
The big thing in the private market's regulatory. So there's not much tax, there's not much, there's some macro things, but the whole thing is regulatory. Two pieces, right? You're going to have the piece about M&A. And everything that's going on in M&A, there's been a tremendous slowdown in M&A due to the regulatory environment. And then there's some specific to individual industries, healthcare, financial technologies, et cetera.
Okay, as a VC, we know what the outcomes are as far as exits, right? So you can see a company in 5 to 10 years go public. You can see strategic M&A. You can see them go out of business, that sort of thing. The IPO window's closed, okay? So under a divided government with maybe less resolve for like sharp regulatory, do you think we could see an uptick in M&A? We haven't seen a ton of it. We saw the start of this year, that big Microsoft for Activision deal. You saw that
which is still hung up.
Well, you saw that the EU is investigating that right now, and they've been a thorn, I think, in Microsoft's acquisitive side in the past here. I'm just curious, like a lot of the companies that you have that maybe, you can't even speculate when an IPO, maybe it's 2024, right? That sort of thing. Might there be an opportunity for tuck-in acquisitions, strategic acquisitions?
There can be. I mean, you're still going to have the same appointed members that are overseeing these types of things. So it's not going to change everything. But at the same time, there is more of a balance. There is more of a thoughtfulness across the board. So you'd like there to be a more active M&A market. You'd like there to be more competition from a private market to public M&A. And hopefully you'll see a little bit of a relaxation of regulatory environments.
You know that I always think about markets in general through the lens of the public markets. And one of the reasons I love having people like you and Jeff and Joe, and a whole host of others join me is that I think you guys have this really good barbell approach with like, you're always have an eye on public markets and comps, that sort of thing, but you're also actively advising many companies in the private tech markets. And you're seeing, I guess, the flow through of a lot of what's going on there into, the private markets, but usually there's a big lag, and we've talked about that.
Yeah, you see a big lag in valuations. You also see a lag in reaction. Sometimes you actually see it going both ways. And sadly, we've talked about layoffs here for the last year, and then there's some people, including Meta, who are just getting to them. There's some people who have gone through Robinhood, the third round of layoffs, after all the OK Computer listeners know to say you do it once, you're decisive, you cut as deep as you need to go, and this shouldn't be a repeat offender. And so you're starting to see, and coming out of, call it the last spot of board meetings, and probably about a dozen board meetings over the last month or so, you're starting to see kind of that labor market shift a little bit. People are less concerned about bringing folks on. They're less concerned about holding on to recruiters. Obviously, they care a lot about their talent and their people, and they really want the people that are there to be motivated, have a sense of doing a great mission that has a great goal at the end. But it's less about, oh my God, how am I going to get the next person in the door? And then probably the last shoe to drop on that was the Meta layoffs. As the put was always being able to say, hey, if I could always go to Facebook or Google and get a job.
Yeah, and I guess to your point, you've been telling our listeners for a while that your advice to founders is like, listen, this is going to be a difficult period. We can all see it. This isn't the start of 2022, and like you said, be decisive, make those sorts of cuts. So you don't have to keep coming back and have a death by 1,000 cuts. It weighs on morale. It weighs on a whole host of things. So I guess earlier this week, the headline was that Facebook Meta was going to be doing mass layoffs here. They have 87,000 workers. And I think your point, and you've mentioned this on many occasions, is that Alphabet, Meta, like all these large platform companies, if you got laid off from a startup, let's say in Q1 or Q2 of this year, you would say there was always a place for you at a larger...
There's always been a place, and there was probably a deficit. And we were just talking about it internally today with our talent team, that there was a deficit of, you might not go even in Q2, you might not go from a great startup to Meta or Alphabet, but you could always go to a Macy's. Yeah. There was always a place to land. And I think you're starting to see a concern that is there always going to be a place to land in the future? And this might be, one of the first signs of consumers, especially young consumers, Henry's high income, not rich yet, millennials, of them facing a comeuppance.
Yeah, so this was the Meta one was really interesting because about a week and a half ago, the stock was down 25% in one day, and was after they reported their Q3 and gave disappointing guidance. And you mentioned Jeff before, so Jeff Richards was on with me last week, and we were talking about Meta, and I told him I kind of bought a little bit. The stock is down 75% from its highs a year ago. And, whatever Mark Zuckerberg and the executive team saw about their core business a year ago, or, at some point in 2021, causing them to spend tens of billions of dollars on rebranding and refocusing this company that has a third of the world's population that they could call a monthly active user, over 3 billion people. At the time, they knew that this was not going to be met with like a level of exuberance. The NASDAQ was just topping out. No one knew that, but interest rates were starting to go higher here. And so the fact is that he doubled down on his commitment to the strategy. This was a couple weeks ago, but they didn't talk about cutting spending. But then 2 weeks later, after the stock's down 30%, what do? They announce mass layoffs. It allows him to stick to whatever his view is of this company going forward, but also appease investors who are looking for cost reductions.
Yeah, I think he's Mark Zuckerberg's a lot of things. Stupid is not one. So, if you think about what he had to do, he has a vision. It's not a bet the company vision, because the company is obviously wildly successful and very large. But he's putting $250 billion into the metaverse, which is, basically, would it be that in alone would just be a top 20 of all time market cap company. So he's betting the company on that. But at the same time, he has the perfect business model of generally user generated content, which is socially shared and produces tons of cash. And so the goal should be, hey, how do I run a good business, maybe even a great business on one side, invest some of those profits in what I think is next in the metaverse, while at the same time making sure I'm running a good business and I'm thoughtful about costs.
Yeah, and I guess where Jeff and I were kind of going back and forth a little bit is like for me with a stock that was much loved, a year ago, where the sentiment couldn't be worse. Okay, the stock performance, you just mentioned $250 billion. I mean, that's the market cap of this company right now. They have $40 billion in cash. It was supposed to be, or is on its way to be, $1 trillion market cap, this time a year ago. And I look at something like this and I say the pendulum has shifted so far one way, whether you like Zuckerberg, whether you like his vision of the future, whether you like the business model and what the product does to people, it's too profitable for what it is. And little things on the margin, like announcing job cuts, or the sort of thing that have the stock bouncing. So my play is not a long-term one. It really is a short-term kind of reversion trade to that downtrend. But I think the unemployment thing is really important. The fact that you are now starting to talk at your team, and I know that you guys have been advising your portfolio companies for a long time to make decisive cuts, okay, and do it early. But here's the thing that's interesting. The last piece of this puzzle for the U.S. Federal Reserve is having that unemployment rate go up. They haven't seen that really happen. In the jobs report that we just saw for October last week, they saw it tick up a little bit from 3.5% to 3.7%. That's really near a 40-year low. And so when you think about this, where was all of the over-exuberance in the market, really, our economy over the last few years? A lot of it had to do with gig economy, startup economy, small, medium business, and then these large platforms hiring hundreds of thousands of people during the pandemic.
Yeah, I mean, if you're Amazon, you're hiring every single person. Facebook, Google, some of the gaming companies, and there were some people working multiple jobs too during that time. So it was incredible. It was, in retrospect, it was an incredible time.
Let's talk about this, Rick, because I know this is a space that you've kept an eye on. And from a FirstMark standpoint, you made some investments in and around crypto. One of the things I think is really interesting is that we've had this gentleman named Sam Bankman-Fried, who's the CEO, founder of FTX, which is a large retail crypto exchange. They had their own stable coin. This guy, based on his own trading and his own hedge fund, had been this kind of buyer of last resort for all of these crypto funds and some of these other platforms that have gone under, and for a whole host of reasons, largely, I think, having to do with leverage, and then really some of the stable coins that these platforms have. Maybe the collateral wasn't exactly what they suggested.
Maybe they shouldn't be called stable coins.
Correct.
Anymore.
They were very unstable, but he would come in one of his entities, and they'd back these things, and they'd take them under. Well, all of a sudden today, the headline is that FTX.com is being bought by its biggest competitor, Binance, which is fascinating because Sam Bankman-Fried had been the buyer of last resort. Now he needed one, and Binance is doing it. Now Binance and the CEO, what he tweeted out was like, this deal is based on due diligence that we have not done yet, so it could fall apart at any moment. And what's interesting to me is that, when Bitcoin had sold off because there was fears about FTX and their solvency, and then when the Binance news came out, it rallied up above 20,000. Well, as we speak, it just did a U-turn over the last few hours. This is Tuesday afternoon, and it's back near $18,500. And what's more interesting to me is that NASDAQ followed it lower here. So talk to me a little bit about this news, correlations to
there's
markets.
Three things in there. It's, hey, what does this news mean? And as an active investor in that ecosystem, how do we think about that? What does it mean for Bitcoin, and what do we see going forward? And then what does correlation mean? And maybe I'll go in reverse order there. I think the correlation, and we've seen it across the board, that everybody was saying crypto is a hedge against the NASDAQ, or this is a hedge against that. More than ever, we're seeing complete correlation of baseball cards to crypto to startup economy to large cap ARK ETF. So things in general, maybe aside from energy, are all moving in the right direction, and they're all moving as it equates to liquidity. So as liquidity comes out of the system, as interest rates rise, the prices are falling. And sometimes they're falling faster than someone could catch them. And especially in what's a believer community at this point in crypto.
Are they still believers? That's the thing that's really funny.
People aren't selling. I don't see there being a lot of selling nor buying, actually. If you look at volume, the interesting thing, you don't want to look at price, but you look at volume. So if you look at volume, the volumes kind of aren't there, and therefore when there's a distressed seller, so let's say, Binance, when they said they had to do diligence, my guess is a lot of that's balance sheet diligence and a lot of the leverage. And my guess is they're going to have to unwind a lot of this leverage through the sale of coins. So obviously they're going to have to sell, semi-stable coins. They're going to have to sell Bitcoin. They're going to have to sell all of this crypto. And who's going to be the buyer there? The market's not efficient enough to absorb that. And I think that's why you're seeing the volatility there. And I think that's where you're seeing some fear in that part of the market.
Before we get to the other two components, I just think that, the support of Bitcoin is something that's really interesting. My co-host, who Danny Moses of On the Tape podcast, with Guy and me, he's been talking about this for over a year, is that he thinks that there's something really evil lurking in these stable coins, Tether in particular. That was FUD around Tether is like as old as like the crypto hills here. But we've seen it one by one over the course of this year this was in the summer of 2021, USDC, which is backed by Coinbase, that's their stable coin. There was issues about what is the collateral for that. And so we saw, so to me, this has been going on for a very long time. I guess it almost feels like a bit of a shell game here because SBF, FTX was backstopping, all of these other ones were failing. Now we have Binance. Literally, this is their main competitor. If he wants to put them out of business, he could put them out of business right now.
But he could also put himself out of business. Imagine if
he's
that
next.
Completely...
It's like the financial crisis,
exactly.
Like when all the banks were going over, who was next?
Who was next? Yeah. And if they have to sell all their coins, obviously the Binance collateral goes away also. And supposedly that was part of what Sam was doing at FTX is he was supporting the ecosystem, maybe because he wanted to, maybe because he had to. And he had to support the ecosystem for his own balance sheet. And it might have been what the today's news is saying is his balance sheet might have been more precarious than, when you saw him on, in a panel with Supermodel.
Yeah. So let's talk about the correlations though, because interestingly enough, the NASDAQ turned when Bitcoin dropped 2,000 points. We have not seen that in a very long time. And so to me, when you think about who are the buyers, there's no retail enthusiasm for crypto at all right now, right? So they're not there. And then maybe we've seen some money, move back into the stock market, but it certainly came out of mega cap tech. And that stuff is probably a bit more correlated to crypto, especially, let's call it the, high valuation names that have been kind of crucified over the last year and a half too. I just think it's interesting at this stage of the game that the NASDAQ would stage that sort of reversal based on a crypto move.
Especially, when you were seeing some small capitulations, things that didn't make sense to the market earlier this year, you knew there were some margin calls occurring. You knew that there was some leverage unwinding. You knew people were covering shorts when it was a much more active market and a much more volatile market being played. Today, that doesn't seem like it's the case, especially in crypto and especially as it relates to the NASDAQ. So it just shows that these systems might be weaker and might be not as resilient as we'd hope they were.
Yeah, I mean, listen, at the end of the day, all the people that have been pushing it on Twitter, there's no more laser eyes. They're not tweeting these long threads about the religion of this sort of thing.
Matt Damon's making movies again.
Yeah, I mean, I guess fortune doesn't favor the brave, people. All right, well, let's talk to me about how you're thinking about the space, because again, at FirstMark, you guys have made some investments over the last few years, and some of them, you've kind of articulated this before, more of the picks and shovels sort of thing.
Picks and shovels. And, we believe in software that does jobs, right? It could be video game software that makes you happy. It could be workflow software and financial services that enables compliance. And it could be crypto projects that do jobs like Helium providing Wi-Fi. And we've talked about that in the pod before.
Yeah, we have. I have a Helium router.
Yeah, it's great.
Yeah.
You're printing money.
Yeah, well, it was. I don't think it prints anything right now. It's Rick. We'll have to have a talk about that.
We'll talk about that
offline.
Off pod.
Yeah.
Off pod. But so we're investors in the ecosystem. We think there are a lot of projects which make sense. We think there's probably more projects that don't make sense. But we're prepared for what the crypto winter is. And I think the key thing that we're thinking about in terms of crypto winter, especially here in the middle of November, is we're not expecting the winter to be over if Puxatawny Phil sees his shadow or doesn't see his shadow. I forget which one it is. That in March, April next year, Bitcoin's back at 40,000. we're saying, hey, these are long arcs. And, especially on days like today, where it's not even a financial arc, it's also rebuilding trust. It's also some of these projects going from speculation to actually doing jobs to actually having operating metrics around those jobs. So there's a long way to go to get to the other side. And we're just starting that journey. So this might be a long winter that's coming.
Yeah, and I guess just as someone who looks at like speculative markets for the last 25 years. My career was born in one in 1997 at a long short equity hedge fund. Like periods of excess like this and just rampant speculation, not just from retail, but also institutions, and especially where there is leverage involved. It's not going to end like this. Like what happened today is probably the start of a capitulation phase. And so, a lot of people, and you and I were talking about it before, people like there's this mirage that 20,000 or so in and around that, either side of it is some sort of support. It's not, people. I mean, this thing, had kind of bottomed out in 19, in the low single digits, thousands. Okay. And then it consolidated after it took off after the start of the pandemic in around 10,000 and then went all the way to 70. And here we are. The fact that we're down so much from 70,000, like within a year, and we've been really going nowhere over the last couple of months in and around this 20,000, these headlines could just be the start. I mean, you need to have some sort of washout here. And all those retail holders have been hanging on for dear life. All those influencers that they've followed and all the laser eyes, they're just hoping they're right. And sooner or later, they're going to give up hope. And that's how bottoms happen.
They could be forced to give up hope, right? I mean, they could be leveraged against the NASDAQ. They could lose their job at Meta. Yeah. There's things that happen where you just can't hold on anymore besides hope.
Listen, when you think of the enthusiasm that went on in 2020 or the back half of it in 2021, that's obviously come unwound in 2022, it has to do with the fact zero interest rates. We flooded the zone with fiscal stimulus. People had cash. They had not a whole heck of a lot of things to do. They could believe in false prophets on the internet and that sort of thing.
And they had tremendous market momentum. And the bigger the party, the bigger the hangover.
All right. Well, speaking of false prophets, and I don't mean profits, profits. I mean profits with a PH in there. Let's talk about Elon Musk here. It's been a crazy couple of weeks. He closed on the deal for Twitter on October 28th. He's fired, it sounds like, haphazardly half of the employees. I think a lot of these guys
hired some back and then probably fired some more.
And the guy's chirping in his ear, we're saying that this company, as dollar per revenue per employee was like a ridiculous levels, et cetera. But he is the C-suite. They got rid of content moderation. They've fired thousands of employees. They've lost tons of advertisers. So if you're taking away revenue streams, like there's a chance that he defaults on this debt. And therefore, what's going to happen if you are a Tesla shareholder, and I've been harping on this for a long time, you better be all in on what he wants to do with Twitter and the price that he paid for it, because if you're looking at the public market comps, he's overpaid by at least $25 billion. And if you are literally in on this thing, you're in on the Tesla, you're a Tesla shareholder, there's a good chance that the banks, that hold that debt might need to do an equity offering to put collateral against that debt. And so why is the stock below 200, down 50% in the last year? I think it's because of that.
I completely agree.
That was a long little bit, but
that was a bit. I mean, basically, you're collateral, you're cross collateralized. No difference than what we just talked about between Twitter and Tesla, and therefore, it might not have anything to do whether you love the Tesla. I have my Tesla. I love the Tesla. But you're at risk because there's personal leverage there.
Well, it's funny. Another thing that you and I have talked about, and we were together with some folks the other day, and we were talking over some Comos. You had a little Syncoro. I had a little Comos.
You had some Syncoro too.
I did have some Syncoro. But I will say this. It's like, so he is the most followed person on Twitter. He's got 115 million followers. There's 330 million, monthly active users, whatever they call daily monetizable active users, this or whatever else. So he's got like more than a third of the people there. And he is tweeting some crazy shit. He is tweeting a lot of stuff about who people should vote for. He's urging people to vote for Republicans in Congress, whether you're Republican or not at the time. I go back to Tesla, Who are the people that believe in electric vehicles? They're people who believe in climate change, These are not these alt-right, libertarian, like techno bros like Elon here, So he's alienating on Twitter. He's tweeting all day long, a lot of crazy shit, and he's alienating Tesla owners and Tesla, the next owner to me. So like explain that to me as a Tesla owner.
As a Tesla owner, I like my car. I didn't buy it because of Elon Musk. I bought it because it was a sustainable car that was great. Separately, am I worried? I'm not really worried about the operations of Tesla, that he's the Tesla CEO, he's the chairman of SpaceX, he's the CEO of Twitter. Doesn't bother me that much.
Well, would it bother you if you were a Tesla shareholder?
It would bother me if I was a Tesla shareholder.
So let's separate those two things.
Because theoretically, yeah. So as a shareholder of SpaceX, Twitter, or Tesla, I'd be bothered by the antics, right? So I'm buying a platform, having a megaphone, using that megaphone to make political commentary. At the same time, I'm trying to run 3 businesses. They're all very complex. 2 are very capital intensive. 1 is under earnings pressure because of a debt load. And, it doesn't feel like, in a time where you could see a recession, or you might be in a recession already, or you might see, a lot of consumer pressure that would affect advertising, luxury, discretionary spending, all the things that he's reliant on, as well as cheap capital from people who are fanboys. That's going to be the issue. So if he loses fanboys and therefore drives up his cost of capital, that affects all 3 businesses, and that creates the beginning of what you're kind of outlining of his death spiral.
Well, listen, I think we've seen peak Musk. I just do. And I've said this on this podcast probably a million times. I mean, never in my 25-year career have you seen a cult leader of a company, okay, and maybe the stock becomes a cult stock. I've never not seen them unwound. I've never seen that it just hasn't happened here. And so I don't know why he would be different. I get it, why people think he's brilliant. I'm willing to concede that. But this might be just a bridge too far, because from a personal finance standpoint, he had to sell a lot of Tesla stock over the last year. He's probably had to pledge a lot.
Does he have to disclose the leverage against this Tesla stock?
Well, it's funny. He has not disclosed what he sold recently. So people are thinking that he actually didn't sell stock. He had disclosed in the spring when he sold stock. And so I don't know what leverage is. I do know that
I think named officers have to disclose leverage, right?
You would think so, because he's basically pledged his stock. There's got to be margin loans all over the place to put that equity up here. The way the stock is being sold over the last couple of days, leads me to believe that someone else is selling stock. He's a 15% holder of the shares of Tesla. But again, this is not about Tesla. I mean, again, I don't their cars. I've been in a lot of those lower end ones. They feel like Honda Civic. I mean, they really do. They're absolutely nothing special, and they rattle a lot, and they feel cheaply made. And I hope you really love your Model Y or whatever you have, or what is the one that you have, the wing doors, the X. Okay. And remember the other night we were talking about this, like how juvenile is. So his cars are the Model S, the Model 3, which is a reverse E, the Model X, and the Model Y. Sexy. Okay. Yes. He's got this fascination with 69. Okay.
Yep.
This
420.
This reeks of a guy who had never smoked a bone and had never been boned before in his life. So I'll just leave it at that. All right. And then just in general here, I think Amanda's like, we got to cut that. We got to cut that. But in general here, no, we're going to leave that. I just look at what's going on with him, and I look at Twitter, and I say to myself, you could say, okay, you want to vote with your wallet, you can sell your Tesla shares. Well, I don't know Tesla shares. You could say to me, okay, I just like this sustainable car. I don't care.
But I also I assume that there's going to be some disclosure of leverage, right? And I know that whether you're Aubrey McClendon back in the Chesapeake days or Elon Musk today, there's been some rules where you have to disclose leverage. And if I owned a company, if I was an equity shareholder of a company where the CEO has significant leverage against his shares and he owns 20% of the company, and a lot of that's based on the performance of a company in social media, if I'm trying to own a car company, that would seem like a crazy risk. That'd be a little bit too far.
It seems like, listen, I've said this. If you want to give me the over-under of 2 years, whether Elon's going to be the CEO of Tesla, I've taken the under. I just don't know. Sooner or later, there's going to be shareholder suits against him, lots of them. First of all, there's current investigations into the company as it relates to their full self-drive, and we know that. That's been disclosed. Okay, so there's numerous ones there. He might have major capital issues if the capital markets go lower, if interest rates stay stay higher, if Twitter were to default on some of their debt covenants, okay, if Tesla's, access to rare earth materials so they can make, these batteries, they're making them in China. Who knows what's going to happen with China? If China were to attack Taiwan or in some way, shape, or form, blockade them or do something like that, will Tesla be able to manufacture in China and really tap into a very important market as it relates to demand for them?
Consumer demand as well as production.
100%.
I agree. So it's China's important, very important on two dimensions for him.
And this is where I kind of get caught up, and we're spending a lot more time, I think, than our producers wanted us on this topic. But where I get caught up is like the days before he was going to close on the Twitter deal. You remember that email or that Twitter thread that he put out there that he's doing this for humanity. He thinks free speech is so important. He loves us and this and that, whatever. Well, if he loves us and he loves free speech, why is he cozying up to the most authoritarian government on the planet, which is China, so that he has, again, access to those rare materials, access to the production, and access to those consumer markets? It just doesn't fly with me. And then when you think about how did he finance this deal for Twitter? Well, he took all this money from the Saudis. I don't know if you know that, but they're kind of persona non grata with us right now. You know what I mean? The fact that all of these banks who were so desperate to do business with him, whether it be for SpaceX, they gave him these $13 billion that they committed to in the debt. By the time they went to do the deal, why I thought maybe they had an out on this was that he spent the last 6 months denigrating the product, the service, the company, which lowered the value of the company that they had committed debt to in the spring. So to me, I thought they'd have an out. Supposedly, opening bid for that debt, is like at best 50 cents on the dollar.
That makes sense.
So the banks are going to literally wear, billions of dollars of losses, and they deserve it, And all these equity people who rolled their stock, if this bid did not exist from Elon Musk, this stock would have it would have been in the 20s. It would have been in the 20s. And the fact that Jack Dorsey, the co-founder of this company, who was a 2-time CEO, had a 2.5% stake in Twitter, and he rolled it into the deal at $54.20, at $44 billion, it makes you think, how fucking smart are some of these guys? I mean, I don't mean smart.
You saw the back and forth via text. You saw the back and forth via DM. They're just like everybody else.
Dumb like us. All right, there's the title right there. Dumb like us.
Correlation. But listen, Elon.
This thing is not done, Rick.
This is going to be exciting. The reason why this is all over the financial media is this is an exciting soap opera playing out that could end terribly. And I'm sure the media would like to see, this a restabilization and a ballast of subscriber fee growth isn't the story anyone's playing for now. They're playing for how does this all correlate with the most exciting car company of the last 100 years, the most exciting space company in the history of time, and the craziest social media platform that probably got in and got rid of a president in the last time, and now all of a sudden they're all run by one guy who's the richest man in the world and likes to make dick jokes. I mean, you couldn't have scripted it better.
He likes poop jokes and dick jokes. I mean, again, I'm juvenile. Let's just all right. Should we move on from Elon?
Sure.
We should move on from Elon. Let's talk about a couple headlines. This morning I tweeted this out, and I thought this was kind of interesting because I'm like, I'm doing my morning reading here, and I'm going over a lot of different sites, CNBC, Bloomberg, FactSet. I spent a lot of time on there. The Information, which I like too, and I just saw a bunch of headlines. Here was one. Tesla stock has dropped more than 35% since Elon first said he'd buy Twitter. Carvana stock has dropped 97% as outlook darkens for used vehicle market. Crypto billionaires brawl triggers contagion fears in markets. And then this one here, and this was going to be one that I really want to focus on. 9 public tech companies is from The Information worth less than what VCs originally invested. And I see all those headlines as a monolith, and I say to myself, it's kind of the beginning of the end game when you think about how many stocks in the market are down 70, 80, 90%, how many cryptos have lost most of their value. I mean, the list goes on and on, you know what I mean, as far as the air that's come out of SPAC market, that's come out of, the IPO market is dead. I mean, you need to start seeing headlines like this. And I guess with my tweet, I was like, we're kind of starting the end game of the bear market, and it probably takes maybe 1, 2, maybe tops 3 quarters, but you'll see it as a rounding bottom a little bit. And again, you need to see capitulation. So when you see in your market, in the private markets, a headline like that from the information, what does that signal to you?
Well, I don't think we're rounding the bottom. We might be rounding the bottom. It might be a wide turn.
Yeah, well, creating a round bottom takes a while.
Really hard to be worse than, a lot of these companies, which were everyday names of Rackspace and Compass and Oscar, being, less than 50% of what they raised in venture money in this story. And, we're seeing a lot of companies being valued at less than what they raised. You're seeing the down rounds, the recaps occurring. And all the venture capitalists, whether they tell you or not, are all working through some companies they have, which hit a rough patch for one reason or another. But, it's time to work through those. I think the key thing that'll determine if it's 1 quarter or 5 quarters is what happens to the consumer, right? There's 2 things I think people are most worried about. What's the contagion of unemployment, and what does that mean for consumer confidence? So where's consumer confidence today? It seems to be eroding. Things, whether it's crypto eroding it, whether it's your next door neighbor got laid off from Meta, whatever those things are that are eroding consumer confidence. And we see it a little bit. I like to look at the vacation rentals, Airbnb particularly, but even anything in the hospitality space is consumer discretionary, ultimate discretionary almost. And what does that mean? And they're still holding up, but everybody's quite scared there. And then the second piece is the Fed going to overcorrect, right? So they've given every signal that they're going to overcorrect. They're up, 550 basis points in the last 6 months. It takes 6 months to have that flow through. So they haven't even seen the results of the corrections they made in March and April, and therefore, but at the same time, they're full steam ahead. So are those 2 things, a weaker consumer, and we all know consumer is about 2/3 of the economy, so therefore it can control the economy. An enterprise which is slowing down spending, key way they've slowed down spending, especially in the tech markets, is firing people. And then a Fed which might continue to raise interest rates, which for the first time in a half a generation is going to put pressure on the earnings line through the interest expense line. You could see the next step down of a renormalization in the first half of next year. So it doesn't seem like there's clear sailing once we hit the bottom to bounce off of. You can make, and this is before your favorite mega threats of Taiwan or nuclear Russia or whatever those things may be, that you have to see what's really going to happen. And I think is whether you're in the public market investor or a private market investor, you're kind of thinking eyes wide open. I'm not going to tie my feet to anything. I want to be able to be flexible. I want to be able to maintain my growth and have enough capital to get to 2024 when it does feel like we'll be through the worst of it.
Yeah, so that seems like it's going to be a big theme. A lot of your companies had made cuts early. The economy provided very little visibility. There's a whole host of geopolitical things that have come up. And so, again, you're going to keep reevaluating kind of where you are and what your runway is.
Yeah, and we don't know what the earnings line is. I mean, you still have had a relatively healthy economy that all of these companies are selling into. And, sometimes startups have more volatility on the revenue line than larger companies. Yeah. And therefore, we're still maybe budgeting to a pretty healthy economy. Yeah. And a step down, especially in consumer discretionary, can have a meaningful impact.
Yeah, I guess that was probably a big theme of Q3 earnings that we just pretty much are getting done with here is that, there was a lot of fear about the health of the consumer, even after they've been propped up through, the pandemic. Savings rates were kind of high. But we also saw consumer credit going much higher here. Now that we're seeing unemployment start to tick up just a little bit, I think to your point, the last part of my takeaway from the earnings season was also that enterprise was starting to see a bit of a slowdown. And so to me, that has been something that's been weighing on public valuations. And I think they're likely to come out of it before private valuations.
And we also saw, going back to when we started talking about this a year ago, that the enterprises were more concerned about the economy than the consumer was. Yeah. Very rare to see this. And this has been, enterprises have been more concerned. That's why the layoffs started before consumer spending stopped. Yeah. So, it's although the enterprise is leading the tightening, it eventually gets to the consumer, and that's the bigger piece of the pie.
Yeah, well, that's going to play out over the next few months. We covered a lot of ground today. I really appreciate you being here in studio. So everybody stick around. I have Jake Wood, CEO, founder of Groundswell, and Joe Marchese. He is the build partner over at Human Ventures.
Hey, Dan.
What up, guy?
You're into this fintech. What's all this I'm hearing about Current?
You're going to like this guy. Current is a fintech company that's completely disrupting traditional banking.
Wait a second. Does that mean I don't have to drive to the bank anymore?
Yeah, exactly. I'm a new Current customer, and I manage all of my finances from one easy-to-use app.
Well, I got to get this app, but where can I learn more?
It's super easy. Just go to current.com/OK, OKAY, and download the app. That's current.com/OK. Current is a financial technology company, not a bank. Banking services provided by and Visa debit card issued by Choice Financial Group, member FDIC, pursuant to a license from Visa USA Inc., and can be used everywhere Visa debit cards are accepted. Hey, it's Dan here. I'm excited to tell you about a $1 billion app that's disrupting the way people like you and me invest. It's called Masterworks. They offer investors access to an estimated $1.7 trillion alternative asset that was once only accessible by the ultra wealthy. I'm talking about blue chip art. Blue chip art has seen price appreciation that's outpaced the S&P 500 by 164% from 1995 to 2021. And the Wall Street Journal recently called it among the hottest markets on earth. It's no wonder the ultra rich like Jeff Bezos recently sold tons of Amazon stock and bought more art. And now you can too with the art investment app called Masterworks.io. Join over 300,000 members for free on Masterworks.io. Just go to masterworks.art/OKComputer, OKAY. That's masterworks.art/OKComputer. See important disclosures at masterworks.io/disclaimer. Taboola uses AI to power recommendations for many of the world's top publishers and cell phone manufacturers. You know Taboola. If you ever went to websites like CNBC or USA Today, when you finish reading an article, it's that tricked out recommendation engine pointing you towards additional content you will like. They also help brands reach over 500 million daily users, which makes them a compelling alternative to Facebook and Google ad platforms. Taboola has long-term exclusive partnerships with publishers, which means they help people like you and me discover content outside of social media. Taboola is a founder-led company that is traded as TBLA on the NASDAQ. Find out more about their mission at taboola.com. I have a special guest here. His name is Jake Wood. He is the founder and CEO of Groundswell, a philanthropy-as-a-service company, but he's actually a lot more than that, and we're going to get into all that. Jake, welcome to OK Computer.
Yeah, hey, thanks for having me, Dan.
All right. Now, like many of our fine guests on this podcast, they have been introduced to me from my good friend, Joe Marchese, who is also here. Partner at Human Ventures. You know him. You love him. Backed by popular demand. And, we've been wanting to do this podcast for a while. Like I said, I met Jake, I think a couple years ago. Before you founded Groundswell, you were the founder and I think CEO at the time of Team Rubicon. I want to talk a lot about that. You're in town from LA this week in New York because you have Team Rubicon's huge gala. I went last year. It's a phenomenal event. You guys raise a ton of money for a great cause. We're going to get into all of that. Joe, you've been involved. You know Jake from Team Rubicon, correct?
Yes, we met in the early days of Team Rubicon. In Lima, Peru, of all places. In Lima, Peru. As one does.
Yeah. Well, I mean, Joe obviously serves in many ways, trying to help others here. Let's take a step back here, Jake, because, I remember reading this profile of you in the New York Times last year, and it's pretty fascinating. He's got like a Forrest Gump thing to him a little bit. Has anyone used that expression before?
No, I've
here?
never.
Really?
Literally don't even know where that's going.
Well, I mean, like literally.
He can't run. Yeah, exactly. I'm not a good runner.
Well, weren't you a tight end for the Wisconsin Badgers?
I was an offensive lineman.
Oh, okay, fine. You really can't run. Why did I think you were a tight end?
He's thinned up because I've lost 50 pounds since then.
All right, so talk to us a little bit because, again, the Forrest Gump thing is like you played football in the Big Ten at Wisconsin. You joined the Marines. You served. You came out of that. You learned a whole host of things about service in general. You started Team Rubicon, and again, now you are a fintech entrepreneur. So
Yeah,
talk
so
to
you're,
us.
so you're saying Team Rubicon's my Bubba Gump shrimp? Is that,
Yeah,
is
wait,
that where
does
this
that make me
analogy goes?
Lieutenant Dan?
I don't know. Who am I in this?
Well, we're going to get in deeper with that. No, but talk to us a little bit about, I mean, like your days playing football in the Big Ten. What was that like, and when were you there?
Yeah, so I played football for the Badgers from 2001 to 2005. It was an amazing experience. I had the opportunity to go and play for Coach Alvarez, Hall of Fame football coach. Really pretty incredible leader, mentor, built an incredible organizational culture up there at Wisconsin, which was fun. I think has paid dividends for me 20 years later. We were good at football back then. We didn't make the Rose Bowl. I got cheated out of it my senior year by Michigan State. But it was an awesome experience, man.
Those hoodlums at Michigan State.
Yeah, exactly.
No, it must. Is it hard for you? I mean, Wisconsin football is fallen on hard times a little bit here. It's kind of like the armpit of the Big.
Oh, come on!
Right
It's
now.
not quite that. Come on. Actually, the interim head coach was my old teammate. I know him extraordinarily well.
Fair enough. So talk to us a little bit about again your service. You joined the Marines, and so you were playing football 01 to 05. Were you ROTC at Wisconsin, or how did?
No, so I was a full athletic scholarship there. There's really no time for ROTC if you're playing football. It's 40 hours a week. But obviously 9/11 happened my freshman year. That was pretty formative. And right before then, my senior year, Pat Tillman was killed in Afghanistan. An old former professional football player. And I think that was a very kind of like a moment of reckoning for me, where I just decided, hey, it was very clear I was not going to make it in the NFL. I wasn't even going to get a chance. I wasn't ready to go into the corporate world. And I decided, all right, hey, we're at war in Iraq and Afghanistan. I'm going to go do my part. And so I enlisted in the Marine Corps right after my last game. And
yeah. So how long did you serve, and how long were you overseas?
so I was in the Marine Corps from 05 to 09. So 4 years, kind of a standard enlistment. And the entire time I was in, I was either training for or deployed to combat. So I did a tour in Iraq in 2007. As part of the surge, and then a tour in Afghanistan a year later, in Afghanistan, southern Helmand Valley.
Yeah, so when you got out of the Marines, you still felt a need to serve. And again, I mean, a lot of guys can go into these programs where I listen, coming from finance, investment banks, they love hiring veterans, the sort of the discipline. And, think about, I used to sit on a trading desk, and we had a couple former, one was a naval aviator. I mean, when you think about like these guys tweaking out about a position that's going against them or whatever, and the sort of situations that you guys have been, what you've been trained for, it's truly astounding. I mean, there's no shortage of opportunities in the corporate world for, people like you coming out of the service. What did you choose to do?
Well, I mean, listen, that's what I thought I was going to do, was go, get on a trading desk next to you. Or actually what I really wanted to do was, be an entrepreneur. It was kind of the height of, Silicon Valley was kind of like rising, in 09, Twitter, Facebook, all of these companies were really launching into the stratosphere. And, I knew I couldn't fly up to San Francisco and knock on Jack Dorsey's door and be like, hey, I'm a Marine sniper. You should totally hire me. There's just nothing marketable.
I don't know. That might have worked.
It might have worked.
That exact line.
He's made crazier decisions recently. The plan was to go get my MBA and to go do the corporate thing. That plan got hijacked, shortly after it was hatched because earthquake hit Haiti. Got a wild hair up my ass and decided I wanted to help. And that was really the genesis of Team Rubicon, was that event. We went down there, we took some veterans and doctors, we were helping out after that earthquake, and then it just really snowballed from there. And fast forward 12 years, that organization that started with 8 random people is an organization with 150,000 people across the globe, responding to hundreds and over 1,000 disasters since inception.
When you started Team Rubicon, did you really think it was going to kind of be a one-off sort of situation here? We have this massive earthquake, this thing in the Western Hemisphere, and you thought I could, given my knowledge and my ability to kind of mobilize some friends who are like very capable. Did you have the idea of this massive organization that you built?
When we first said, hey, let's go to Haiti, it was, we're going to go down there a couple weeks, we're going to come back, it's going to be a story we tell at bars, and Joe's on the board, and it's how we've really gotten to know each other well. We just had a board meeting, our annual board meeting yesterday here in New York, and to see where the organization is, it'll raise $52 million this year. It's got 160,000 volunteers this year to date. We've already run 111 disaster and humanitarian operations. That was never the intent. And even when we got back and from Haiti and said, okay, hey, let's kind of keep going with this. I thought the upper limit of what it could accomplish was like $1 million a year.
So it's funny. I haven't sat, through as you've told that story in person again in a long time. But if now after watching Groundswell come, which I know we'll get to, isn't that the story of an entrepreneur? Like it never ends what you started as. You normally start small. You see a problem that you think you have a unique ability to solve, right? And like we ask every founder that comes through Human, why now, why you, right? Because we're that early. I mean, look, the why now, why you in the Team Rubicon founding Haiti earthquake, special skill set trained by the U.S. government to do certain things in moments of crisis. So, and then it snowballs into a giant organization. As a matter of fact, most people who start with a plan, we're going to be a massive organization, don't go there, right? It's too complicated. There's too many things that are going to change. And so like when you hear it told that way, if you just removed that you knew it was going to end up being a nonprofit, you would sound like a consummate startup story.
One of the things I've been hearing a lot more recently is, everybody knows about product market fit, but everybody now is talking a lot more about founder market fit, which is exactly what you're talking about. And I think it was a lot of right place, right time, right person for starting a challenger organization in the disaster space. And I think same thing with Groundswell, right? There was a lot of expertise that was developed building a nonprofit through some challenging economic times, and now pivoting into making philanthropy more effective, more efficient, more egalitarian. The timing is right.
It's interesting. We had Jason Kander, who just wrote this book, Invisible Storm, and he was on the pod recently. And it's just pretty fascinating. I think he joined the service at a similar time that you did. He served in Afghanistan. And in reading his book, it's pretty fascinating about just the challenges. He came out, he was in law school, and then went to, serve in Afghanistan. The story is about PTSD and how he's dealing with it. Not even, some of the worst case scenarios, but just how it's kind of, infected his life. How has just the experience over there just, overall been for you as you think about building nonprofits, as you think about building organizations? I assume you're in touch with a lot of veterans, and this sort of infrastructure really helps them, I think, deal with some of those, the aftermath of serving over there?
Yeah. So, I guess maybe before answering that, zooming out for the listeners that aren't familiar with Team Rubicon, the organization basically recruits, trains, and deploys military veterans for disaster response. So we're taking, men and women who've served often or primarily from Iraq and Afghanistan, but all the way back to Vietnam, even some Korean War vets. And those guys are old, but they're wily. We, as Joe mentioned, we repurpose the skills that the military gave them to, bring order to the chaos of these post-disaster situations. And I think what you're referring to, Dan, is this unintended consequence of that mission that we discovered was these veterans found this renewed sense of purpose that was really powerful. One of the things my wife likes to joke about, she's like, Jake, you never actually got out of the Marine Corps because, I started Team Rubicon 60 days after the Marine Corps. So I never really had that hard transition where I found myself lacking purpose because I just started pouring it into Team Rubicon. Now, I can't say it was without challenges. I lost friends to suicide. My sniper partner committed suicide, 2 years after I got out. And, those were tragedies. My unit, the whole battalion that I served with has lost more men to suicide than we did in combat. And we served during the 2 deadliest years of the war. So we lost a lot of Marines in combat, and yet we've lost more coming back. And I think maybe pull that thread just a little bit further. I think one of the things, as you mentioned, post-traumatic stress, PTSD, I think it's a very misunderstood dilemma. I think it's overdiagnosed. And I think what we often do is conflate PTSD with moral injury, the spiritual, moral injury that people suffer in war. You're doing horrible things. You're seeing horrible things. That's not necessarily the same as having kind of a chemical imbalance of PTSD. And you have to approach them differently. I think purpose is a universal human need. And certainly, for someone coming back from war, I think that's exacerbated, and I think Team Rubicon has helped there.
Yeah, no, well, that's great. I would love to get to kind of, Joe, how you got involved in it. You guys just mentioned that you met in Lima, Peru, so it was during, I guess, disaster relief.
No,
situation?
actually, it was a
tech conference.
It was a tech for good, tech for change.
Here, let's start that over again.
No, it's okay. It's because there's some relevancy here, which is like so. When I first met Jake, we were at a Tech for Good conference, and we're talking about how people can participate, get engaged. And Team Rubicon was just getting started. He was early days of Team Rubicon. I met Jake, obviously, dynamic person. We became friends, and we were friends for a long time. I didn't join the board for I don't know, years.
5 or 6 years, probably.
Yeah, 5 or 6 years after that. But then one day here in New York, we were sitting for breakfast, and he told me that part of the story. It wasn't just the disaster relief. It was the resiliency that it brings into people here in the U.S. And veterans when they come home. And it's that dual purpose of the organization that gave me, like, it just kind of lit a fire for me. And that became something that I was very passionate about. Having never served, I'd always been shy about, I don't want to be on the board of a nonprofit that's veteran-led because I haven't served. And it was Jake coming around saying, no, we need people who are storytellers, marketers, people who've been here. But I think the interesting part, when you talk about purpose, there's also a broader thread even beyond the veterans, like that we think of a lot right now, which is Derek Thompson has these great talks from the Atlantic about an abundance mindset. So our society might end up in abundance mindset, but like we need purpose for people, right? And people participating in civic duty, people volunteering, people helping their neighbors, going across political lines, that kind of purpose economy was a big deal for me. And almost as much as the disaster relief, as what Team Rubicon does on the worst days, what are they doing on all the other days? And so that was when I got hooked. I was 5 years into Team Rubicon, joined the board, and then we'll start to get into what I saw in Jake, which was I saw board meetings run better than $100 million funded startups. I mean, the corporate partnerships, the discipline in raising money, the metrics they were measuring people by, managing 100,000 person volunteer force in the U.S. was just astounding. And so then it came to a point where I said, if you ever start anything, I'm not recruiting you out of a nonprofit. I want to make that very clear on this. other than they did get art, so then we got
to talk about Art Delacour.
We upgraded CEOs.
An absolute stud, former Top Gun pilot, right? Yeah. And I mean, so he took over the reins, and I think that's about the time where you and I met because you were just starting. You guys were starting Groundswell. You were the executive chairman. Art is a fascinating guy. It sounds like it was time, right? You kind of did phase one here. And
I mean, I first met Art. We got put in touch by mutual friends. I wasn't looking for, to add a senior executive to the team, but I walked away from that meeting and I just said to myself, like, I'm going to hire that guy one day. And, about a year later, I called him up. He was working for Northrop Grumman or Raytheon or something like that, probably selling missile defense systems. And I said, hey, man, you sick of selling missiles to Saudi Arabia? You want to go do something more meaningful? And he said yes. So he came on board as my COO, and, I was lucky to have him as a partner for 5 years. And it was just time. It was time 5 years later for me to step away and do something else.
So how can people who are listening to this now participate? How can they just donate? What are some of the things they can do for Team Rubicon?
Yeah, I mean, it's really very simple. So, go to our website, teamrubiconusa.org. And one thing that I failed to mention earlier, it's not exclusively military veterans that are involved as volunteers with our organization. We've got 25-30% of our volunteers are, have not worn the uniform, and they're incredibly valuable to the mission. Joe mentioned, building this resilience. How do you make our society more capable, more outward thinking, less insular, less thinking about, hey, what's in it for me? And so we'll take anybody that wants to serve, and we'll give them the skills that they need, a mission that's meaningful. We'll keep them safe, and really show them how to have impact. So whether it's donating your time or your money, we'll put it to good use.
All right, people, let's do that in support of Team Rubicon. Okay, Joe. So again, you just said that you didn't want to recruit him out of this like really well-functioning dual-purpose nonprofit, but you kind of did. Or what did you say to him? You said whenever you're ready to do something in the private sector.
The literal line was, if you want to start an ice cream stand, I will back the ice cream stand. I really was hoping he didn't want to do that because that would have been harder to explain to the LPs at Human. But I was like, whatever it is, I'm in. And I just remember it was probably 6 months of thinking through or just bouncing things around as you were getting ready to get art ready for the chair. And then one day you called me and you're like, okay, I found the thing that I can't sleep because I'm thinking about it. I found the thing that keeps me awake. And it was this idea of corporate philanthropy.
Yeah. I mean, listen, I was so lucky to have guys like Joe on the board. I don't call many people that are my same age, my same vintage, mentors, but Joe was an incredible mentor. And so just the opportunity to start something with Joe was exciting. Joe's a seasoned entrepreneur. He's done this a lot of times. And I was confident that I could flip over to that for-profit, venture-backed side and be successful again. But you always kind of wonder, like, hey, can I catch lightning in the bottle twice? But, you can kind of create unfair advantages when you partner up with guys like Joe. And I'm a big believer in creating unfair advantages. So, I was lucky to do that.
So it sounds like that your first idea, the tequila wasn't particularly great, and he already had. So I just want to be really clear on that. So Komos went out on that one.
Yeah.
Okay, fair enough.
We'd already had that. Richard Betts, I don't know that he could beat Jake at a lot of physical contests, but in crafting world-class tequila.
Not that you'll be lacking this week in New York City here, but every guest of OK Computer and On the Tape gets a bottle of Komos tequila here. So you're going to have a little bit of that. All right, but talk to us. What is philanthropy as a service? You do recognize the fact that that's probably a new concept to a lot of people.
Yeah. So let me maybe back up and share the problem that I observed. So in 10 years running Team Rubicon, I raised $350 million in philanthropy. Right. So a lot of money, and I realized kind of two things. One, rich people have access to tools for their giving that average people don't. I always found that was unfair, and I feel like in today's age that just didn't seem logical anymore. Second thing was companies think they're good at giving away money, and they actually suck at it. So you have a lot of companies out there giving away a lot of billions and billions of dollars of philanthropy a year. They think they're good at it. They're not. They think that they're driving business outcomes with it. They're not. They think they're inspiring their employees. They're not. And so having seen that, I just felt like there was a better way. We created Groundswell with the mission of democratizing philanthropy. What that means for us is building the world's best, most modern donor-advised fund, making it available to anyone in the most cost-effective way. And then what we've done is we've packaged that as a platform that we sell to companies that allows them to roll these personal giving accounts out to employees. They're tax-advantaged like an HSA or 401k, and those companies then can give or match money into it. So basically decentralizing their corporate philanthropy, empowering their employees to give it away to what matters most to them. And so what they're really doing is they're empowering their people. They're investing in the diversity of their people because each of their employees has a different perspective on what matters most in the world. They're providing an innovative and unique benefit that's really, Joe kind of really leaned into this concept of making philanthropy a component of your compensation, right? Subsidizing the philanthropy that people are already doing. So it's been powerful. I think that going back to timing, the timing's right. The world has changed. Stakeholders at companies expect their companies to give back, to align, to have a values alignment. They expect their CEOs to speak or act on every social issue that arises. And like that last thing, that's pretty unsustainable. Like that's a minefield for executives.
Well, Joe, as an investor and a VC, and you hear a lot of pitches, what was attractive about this idea? What did you think that Jake's idea was kind of disintermediating?
Well, one where what he said, I'll say it in my simplified way of good companies or take something rich people have and then use tech to make it available to everybody, right? Like rich people have private drivers, Uber is tech, everyone has a private driver, rich people have summer homes, Airbnb, anyone could have a summer home for a week. Why can't everybody have a donor advised fund? So that's one component. But one thing we look at Human is, can we find a consensus space? So there's lots of people who think donor advised funds should be for everybody. But can you have a counter consensus approach? And that was the other part of the coin, which is Jake has raised hundreds of millions of dollars for charity, and he can go through the stats more, but corporate giving is wildly inefficient, and it's the largest source of it. And at the same time, corporations are looking to engage their employees more. They're like, so could you use the fintech rails to solve this problem and have this pool of money not coming from consumers? Because while consumers all would like a donor advised fund, like the normal person isn't looking for new ways to give away money. Corporations are looking for new ways to give away money. So that was that last little unlock, and it got really exciting. I mean, take that, and then like we talked about, why now? You could have a charity that is, we support kittens, and you'll have 5% of your workforce that hates that charity. I don't know why, but like you will. And so the ability to decentralize, not in a blockchain way, but literally decentralize corporate philanthropy. So instead of Corporation X giving away money to the Boys and Girls Club, Dan Nathan gives away money to the Boys and Girls Club of Albany, right? And imagine your entire employee base doing that. And so that became just wildly exciting and something that was so clear to see, but it was something that evolved over time.
What were some of the companies that just got it right out of the gate, and what's some of the feedback that you're getting both from the company who's providing this as a service and then some of the employees who it's probably brand new to them, this concept?
Yeah, it's interesting. So we came in a beta about 4 or 5 months ago. We've signed up a bunch of companies. There's one interesting thing is that there are companies out there, software companies that have solutions for employee giving. Frankly, the solutions are quite archaic. The platforms themselves are clunky, and we've really. Well, what those platforms have done is automate a process, right? What we've thought about is how do we reimagine what the process should be? So like, Henry Ford said, if I asked people what they wanted, I would have given, the answer I would have gotten was faster horses. Instead, I gave them the Model T. We're not looking to build faster horses. We're looking to build the Model T. And we've done that. And so one of the things about these legacy providers is they're not on-prem, but they're like from that era, right? And huge account minimums. They can only really service Fortune 500 companies. So first and foremost, we've built a really lean platform, with the most modern architecture, which allows us to go down market and easily service a mid-market or SMB customer, which is exciting because what happens is, I'll use one community that you're familiar with, investment management firms, right? Hedge funds, PE, the largest investment management firms out there, they use these legacy providers. Goldman Sachs uses these legacy providers. These smaller shops, 100 employees, they've never been able to afford it. It never made sense to spend $50,000 on a platform to do employee giving when you're only giving away $100,000 a year. We can get those companies and bring them up to parity in their benefits offering immediately at a lower price point. So that's been kind of an exciting thing. The other thing, I mentioned we've reimagined what the process looks like. Because we've built this with a donor advised fund at the center of what we do, we've actually created this layer of privacy. Right? Other platforms, the employee has to disclose to their employer where they gave in order to get a match. That's fine if it's like the local animal shelter and it's pretty benign. If it's Planned Parenthood, after a really controversial decision around Roe v. Wade, you may not do that if the woman in HR processing it is a devout Catholic. Not to pick on Catholics, right? And you can think about that from all sides of the issue.
No Catholics were heard in the recording of this podcast.
Yeah. And because, we've built this so all the matches go first into that donor advised fund. And then you can give it away however you want, as authentically as you want. And by disaggregating it, we've created this really private experience that allows people to, again, participate more fully as themselves in protecting that.
I'd add to that, when Jake talks about there are, and we thought about this a lot as it was starting, as Groundswell was getting off the ground, was there are large platforms that have this as a component of what they do. But that's like saying Microsoft had chat as a component of the Microsoft Office suite, and yet there's Slack, right? There was video. There was Skype before there. It definitely still exists. Yeah. But the idea that there is purpose built for one particular thing allows you to make something that is just so much cleaner to use. And it is a good enough product that a consumer could sign up on their own. I have it on my phone right now. I use it for all my giving. It makes it super easy. It's like Venmo for giving. It takes me 2 seconds to go in and give money to a charity. And then at the end of the year, just think about it. At the end of the year, I just have one account. Do you know everything you gave to over the last 2 or 3 years?
No, it's a mess. You literally have to go to your Amex card and sort. And it really is a mess.
I tracked mine in my inbox.
And this is the same problem for someone who's making $50K a year, $100K a year, $200K a year, all the way up until you have a family office that can keep track of this stuff, which is the 1% of the 1% of the 1%. You can't do that. So making it easy enough that a consumer says, "Oh wow, this is something I'm going to take with me." But then, okay, but where's the funding going to come from? Then that's where the corporate.
It's interesting. In my inbox, I have an email from Christy Marchese. How do you? Marchese. She's talking about her husband who's running the New York City Marathon this weekend, and you can support his charity that you're raising money for, Haymakers for Hope, and she actually has a link to Groundswell.io where again, it makes it really, I think all of us are kind of like, you look at some of those other sites there and they're clunky and they don't look like legitimate, and this is really a kind of a platform based sort of thing, and I suppose for you, and I think Jake and I both know this, this is that Joe and Christy are two of the most generous people we know.
No
They're
doubt.
helping every organization that they find, remotely useful.
The word "no" is not in their lexicon.
And for you, Joe, like this sort of tool must be pretty.
It's amazing. I mean, look, the way we set this up, and this just kind of, this is brand new. There's not even a workflow to support this, and yet it just works anyway, which is everyone who donates to Haymakers, I'm doing a 2x match to their charity. That would take me forever to go to every charity's page, figure out how they use it. But right now, I just have the money's in the account, and every time someone makes a donation, I just type it in and hit send, and it goes to their charity. I don't have to change anything.
Listen, and I mean this sincerely. I'm in awe of both of you. I worked when I was in college in Philadelphia in, I think it was like 1993 and 94. I worked for a guy, an ex-Marine. His name was Dick Welsh, and he served 2 tours in Vietnam, and he was a stockbroker at Prudential Securities. And he used to come out to me, and he'd say Nathan's, and he was aging at this point. He'd call me Nathan's. I don't know. He didn't know my first name. And he had a $20 bill, and he would go down to that croissant place. It was like Oban Pan or something, and get me a sandwich and get one for yourself. And he goes, he used to say this, I have the money, but I don't have the time. Okay. And he used to say he felt bad about me going down there and getting him a sandwich every day. But this was a guy who was uniquely interested in helping others and doing things. He was a mentor to me. And so I guess I'm kind of like Dick Welch in a way. When I see people like you guys who are so giving of your time and so immersed in it, and now what you're doing is you're building a platform to help others do it and give back in a way. So I'm more that guy, like
you want us to go get you a sandwich?
Yeah. So let's be clear. That's asking us to do.
Did you hear it? That sound was my stomach growling a little bit. Talk to us a little bit about this founder's journey for you, because I think you Joe aptly said it. You had already been on that journey, but you were doing it for a nonprofit. You set up an organization that, he was as impressed with as he is on many of the human companies who are VC backed, that sort of thing. So now where are you a couple years on? Talk to us a little bit about, there you were raising money. When you were going to raise money from corporations, they know where it was going and how useful it was and the dual purpose of it. Now it's like you are a steward of their capital, right? To build a business. What's that been like?
I mean, it's been fascinating. One of the things that was pretty remarkable is we first went out and started raising money for Groundswell. I'd have a 30-minute phone call with a potential investor at the end of which he'd say, all right, hey, and this was just a pre-seed round, raising on a safe note. And they'd say, hey, yeah, I'm in for $500,000. I'd love a $1 million allocation. And I'd hang up the phone and be like, oh my God, are you kidding me? Like I used to have to beg, borrow, and steal somebody to give me $1 million at Team Rubicon. And this guy doesn't, he's met me for 25 minutes. He's going to cut a 7-figure check. It was honestly frustrating. Yeah. How easy it was to raise money.
Well, you also have to remember the timing of this was right in the heat, and so a pre-seed deal at that, and like something that you're going to grow into that people could actually say, okay, I see there's meat on the bones of this, because there was money getting thrown at the craziest things at that time.
I mean, listen, we're not going to get in a macro discussion. Guy Dami's not here. When you think about the difference of where we are than a few years ago, where the interest rates where they were, monetary policy in general, where it was, the risk-taking appetite. But again, Joe, this goes back to you've seen a lot of cockamamie ideas come across your desk, yours and Heather's, you know what I mean? This is probably one that resonated as an investor because you see the clear opportunity, you see the incumbents right now, you see, really the change in which this it really is it's a marketplace in a way. Would you consider it that way?
I can make this so simple. You can see who it gives value to and who are the customers. So if you can see who it gives value to and who pays for it. I can't believe that that's an amazing concept to have to throw out there. But there were companies raising money where you're like, well, who's going to pay for it? Someday we'll figure out someone to pay for it. We've kind of always been stuck on at human, and this is the other portion of it is we think there's $1 trillion market in things that make living in this world better rather than, escaping to the metaverse or everything's going to be.
Don't get me started.
Yeah.
Well, actually, I want to get you started here because you're kind of an outspoken guy here. No, it is interesting. And, I'll just say this, my dad is a retired lieutenant colonel in the Army, and I just did this amazing trip with him in the spring. It was one of those honor flights where, 150 guys from Syracuse, New York, and they had people like me, like a loved one, go with them to DC for the day. And it's a truly amazing thing. All of these individuals, and they're predominantly men from all different walks of life, on that plane together, on that bus in DC, they're all like a unit again, or however you guys would refer to it. And I found that fascinating. But then if you split them all up and you send them back to their living rooms and these guys are turning on Fox News, and these guys are turning on CNN, and these guys are turning on MSNBC. It's kind of like that word patriot. When I think when you joined the Marines, it was pretty universal what that meant if you were serving your country. And now it seems like two very different things. And I'm just curious, how has that been for you? Because at Team Rubicon, I'm sure there's big political rifts. You know what I mean? I don't mean rifts among the people, but the way the participants think about it, the way the people donating to Team Rubicon, right? Is that a thing or no? And I'm not trying to kind of get you to trip you up here, and I'm just curious how you think about it.
I think the last 2 years have been really challenging internally. I think for the first 9 years of the organization, we were really good at navigating the political environment internally because we have a very diverse volunteer base and along the political spectrum. I'd say as an organization, it's really, what we do is very progressive, and we have, I think, very progressive ideals. But the military leans conservative. I don't think it's as monolithic politically as people want to paint it, but it certainly leans conservative. The last 2 years were hard. COVID really divided the organization, between the people that thought it was real and the people that thought it was fake. Vaccines really divided
much like the country, but think about where we are right now. So, for instance, what percentage of Team Rubicon operations are outside the U.S.?
Oh, very small. I'd say 5%.
Okay. All right. Because I was going to say, here's a big issue that's basically on the ballot in the midterms next week, is that if the Republicans take the House and the Senate, the risk is that we're going to see much less aid going to Ukraine. Right. And so think about these are
and Ukraine is one of the places Team Rubicon has operations right now.
We're boots on the ground in Ukraine. Listen, if that happens, it's a tragedy. I think if people are so myopic to not believe or understand that we're at war with Russia it's in a proxy and I think we have to admit that. And we'd much rather be fighting this war in this manner than in the way it could manifest over the next decade. Anyway.
Well, here's one other question for you, because we're in this kind of political season also, right, with the midterms. I mean, donation, the mechanisms for donating to political causes, it seems absurd. You could be the most progressive or the most conservative person, and you could be getting, 1,000 communications in a month from your hero, you know what I mean, on that side, and you just want to delete your account. You know what I mean? My God. Is there an opportunity, as you think about it in Groundswell, for political donations and how you might help organize that process?
We've talked about, in the future, a product you cannot donate to political causes through Groundswell, right? You can't make distributions. They're
not tax deductible.
Yeah, exactly. It's not an authorized distribution from a public charity, which Groundswell is. But is there a companion product in the future? Potentially. One of the things that we'll know a lot about our users is the issues that they are really passionate about.
I'm literally watching you say that, and I'm picturing when Tammy, who is the chief product officer at Groundswell, hears him say companion product and hears product creep, throwing her phone at something. So Tammy, don't worry, I got you. I'm here with him. He's not adding things to the product.
Tammy, give me a ring. I mean, to me, as someone who actually likes to donate, if any of my friends are doing something like you're doing, if you're going somewhere to support some cause, you're going to run some race, I always give. Okay, and so to your point, how do you organize all that? But then on the political side, I do a lot of donations. Some I do bigger, some I do route 2. I'd love it all in one place.
It would take a while to get there on this.
Two dashboards. Tammy, that's all I'm saying. Two dashboards. That's all I need. Yeah, okay.
If we would have to have an entire another podcast on the fact that money isn't the problem in politics. It is the problem, and it isn't.
It's a huge problem.
But I'm saying it isn't the problem in that they're not winning or losing because you didn't donate that extra $1,000 so that they could buy more media that's useless for the 14th.
It's all that dark money.
Well, I think one of the real issues in politics, there's a lot, but
after we cover the politics, can we cover what are the right religions and why? Because I want to make sure we touch on everything here.
No, I think one of the issues is people, they only care about these federal elections, right? And people just really fail to understand the power of local politics and helping people sift through how to get the right local leaders elected. I think there's a powerful opportunity there. Whether there's something, No,
I mean, it is the incentives. You think about our people in the House of Representatives. They literally have to run every 2 years. It's a nonstop fundraising operation, and who are their masters? I get all that. Here's one I wanted to hit really quickly when we talk about just the economic environment has changed pretty dramatically, as we just kind of touched upon in just the last 2 years. And obviously the last 3 years since the pandemic started, it's kind of been a very volatile situation. How have you guys seen, in both organizations, Team Rubicon and Groundswell, how have you seen, the propensity for people to give in philanthropy in general, especially when we know that, lots of parts of this country really came together and tried to help, like their fellow citizens in need. But I'm just curious from a more institutionalized standpoint, how is headwinds to an economy with rising inflation and the potential for rising unemployment, that sort of thing, how has that affected, giving in general?
So America's a really unique place, but, relative to philanthropy, America's the most generous nation on the planet. It's not even, the second place isn't even close. And recessions do dampen individual giving slightly. But, what's really interesting is Americans will still continue to give to charity even in a recessionary period, and they'll cut other spending elsewhere in their lives, but they'll continue to give. And that's just really remarkable. I think it says something about a special element of American life. Beyond the individual giving, foundations who have money set aside, they have, they're sitting on huge piles of cash. They actually step up in these moments. They understand that the need will increase. Food banks will have a larger drain. Things like domestic violence spike in times of economic uncertainty. So you have just a lot of needs. Every social issue is exacerbated in these moments, and often, foundations will step up to fill voids if they arise.
There is so much money pooled at the top. Look at the amazing work that Mackenzie Scott is doing. Look at the Gates Foundation. Look at Eric Schmidt just announced a new fund. There's so much money that's pooled at the top. The problem is efficient distribution to the places where it can actually do good, right? And this is part of what was so. We won't go there either. But the idea of getting the money to where it can do the most good, this is back to what I was saying before about the decentralization of the giving down to on the ground, someone who can see that, this would be very helpful in my neighborhood if I gave this away. And technology's promise was always that we could make things more efficient through technology. Philanthropy hasn't gotten the treatment that normal financial services has gotten from technology yet. But couldn't it have the billions and billions of dollars flowing through at a more efficient level and actually just do better for us this time around in a downturn?
Fascinating to see, how Groundswell progresses. And I think when we come out of whatever this economic period we're in, it really seems like, especially how, a divided America on a lot of different fronts. When you think about the example that you gave about Planned Parenthood is a really fascinating one. Like tools and platforms like yours might be, a great outlet for people to kind of funnel, money in a really effective way to causes that they care about at a time where privacy is a huge focus.
I mean, that example is real, and it's I think a big deal. And also, if you think about it, there are issues where 80-90% of the population, it's certainly a strong majority. Look what happened post Dobbs, right? In the election in Tennessee, I believe.
Yeah, and in Kansas.
And in Kansas.
Yeah.
But it was a validation that there is a majority support, but there isn't unanimous support. So it's very hard for corporations to take a stance. But if the corporation can give it to the employees to give away, a majority of people will be giving to the causes that they believe in. So these places where a very vocal small minority are stopping corporations from doing the right thing.
They're holding them hostage.
You can actually get the money to people to do it. I think that's one of the things we need to do. Just generally, Groundswell first, and then, but in general, there's a bunch of things that a majority of the country would be around, and so we can help with that.
Yeah, listen, I hope that any listeners here who are just all of this might be new to them. I mean, when I met you and I heard about this was not something that Philanthropy-as-a-Service and these sorts of donor advised funds, they were just not in my purview, and I just think that you guys are onto something. I'm pretty fascinated by it. So if you are running a corporation or you work somewhere and you're interested in this sort of stuff, ask about it, I guess. It would be groundswell.io. All right. Well, on that note, Jake Wood, he is the founder of Team Rubicon. Go support Team Rubicon. We will be supporting Team Rubicon. Joe's on the board of Team Rubicon. They have their annual gala. You have raised how much since you started Team Rubicon?
$350 million.
It's amazing. It's truly amazing. So go check that out, people. Groundswell.io. Jake is the CEO, founder of that. Joe Marchese, thank you, executive chairman of Groundswell.
Co-executive chairman of Groundswell. We didn't get to today. We had a lot of ground to cover. cover, but like right at the very beginning, actually another member of Jake's board, Adam Miller, a very, very successful entrepreneur, one of the most prolific investors in Southern California, also came on. So Jake isn't kidding when he says he has an unfair advantage.
Creating unfair advantages and packing all my mentors into Groundswell.
Check out Groundswell. Shout out Adam Miller. And also, Joe, you were also a build partner, and you've been a great mentor. You said this before about stacking the decks and this and that. Joe's been so helpful to Guy and myself and what we're building here at Risk Reversal Media. So whenever we have you involved, and the intros that you've made over the years have been truly amazing. So thank you guys for being here on OK Computer.
Yeah, thanks for having us on.
Thanks again to our presenting sponsor, Current, and our supporters, Masterworks and Taboola, for bringing you this episode of OK Computer. If you like what you heard, make sure you hit follow and leave us a review. It helps people find our show. And we want to hear from you. Email us at contact@riskreversal.com. Follow and connect with us on Twitter at OKComputerPod. We'll see you next time.